Hey everyone, this is C Crypto Daily Buzz. Today is March 1st, 2026. This channel summarizes the most important crypto news for investors in Southeast Asia, including the Philippines, Vietnam, Indonesia, and OFW communities. Today's episode is a special focus on how Bitcoin is reacting to the latest Middle East war risk and what the data tells us about sentiment and positioning. First, how Bitcoin handled the Iran-US escalation this week. Despite missile attacks and global risk-off headlines, Bitcoin has held above the low 60K region and even bounced back towards 68K. According to multiple market reports, BTC repeatedly found support around $63,000 to $64,000 and briefly reclaimed $67,000 on major exchanges. Analysts note that this behavior is very different from earlier crises, when Bitcoin tended to fall in line with equities. This time, it has shown relative strength. It has shown resilience, especially over the weekend when traditional markets were closed, proving its ability to decouple from stocks during shocks. For investors in Southeast Asia, including traders in the Philippines and Vietnam, this price action supports the idea that BTC is maturing as an asset. Bitcoin may not be a pure safe haven yet, but its recent strength is a significant sign of maturity for long-term holders. Second, derivatives data shows just how violent this week's positioning has been. Perpetual futures funding on Bitcoin briefly plunged to about 6% annualized. At one point, more than $1.8 billion in sell orders hit the market within a single hour, signaling aggressive downside bets from short sellers. At the same time, 24-hour liquidation totals exceeded $500 million, with over $420 million coming from long positions during the headlines. The derivatives pressure index slid from 30% to 18% as that sell wave washed through, suggesting a rapid shift into risk-off mode across the market. For Southeast Asia traders, this is an environment where both sides can get trapped. Shorts can face a squeeze, while leveraged longs can be wiped out. For most people, especially OFWs trading part-time, reducing leverage and focusing on spot or small position sizes makes more sense right now. Don't try to time every spike in this volatility. Protecting your capital is the most important rule in this market. Third, the prediction market angle. On Polymarket, one wallet reportedly made $500,000 betting on a US strike, while another lost $6.5 million. A newly created wallet turned $60,000 into nearly $500,000 in profit right before the attack, raising questions about potential insider information. By contrast, a trader using the handle Anoin123 flipped from $2 million in unrealized profits to a loss of $4.5 million when the airstrikes happened. This illustrates both the power and the danger of prediction markets. They price risk in real time, but they can also magnify losses for overconfident traders. For Southeast Asia investors experimenting with Polymarket, remember that these platforms are not games. Position sizing matters as much as on any exchange. Stay informed, but never bet more than you can afford to lose on these speculative outcomes. Risk management is your best defense. To sum up, Bitcoin has shown surprising resilience above 60K. Derivatives data reveals extreme positioning with massive sell waves, and prediction markets carry heavy risks. This video is for information and education only, and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please subscribe, hit the like button, and turn on the notification bell. Thanks for watching C Crypto Daily Buzz, and I'll see you in the next episode.